Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, this is going to be a members only video. Okay, it's not going to go out for general public. Okay. You know, it's come to my attention there's probably some people on the Discord server that haven't paid for the membership and they just still have access to it from their original membership. So I'm going to have to figure out how to clean all that mess up. So just be on notice that if you haven't paid for memberships and you're still accessing the Discord server, that free ride may be coming to an end. Okay. And I know y'all aren't going to like this, but I may have to raise rates, but I'm not going to do it yet. Okay. Got to get all that junk off of YouTube and get it onto some other platforms. All right. So anyway, that's a video for a different day. Let's talk about the S&P 500. All right. S&P 500, September 22 contracts. We're looking at the E-mini futures product here, okay? So just briefly, what do I think is going to happen next week, which is basically today? Today is Sunday, and futures start trading. They start trading in about 3 hours, okay? Because they start at 5 o'clock Texas time. On Sunday night, which is today. So what do I think is going to happen? I said on the Discord server that I looked at some data. Okay, and I won't dive into the exact details of of all the data I looked at, but I looked at the data and I really get a sense that overall I think we could see 2, 3, maybe even 4 weeks on the average of downward price action. Okay. So just kind of be aware of that. Yes, I think we'll get some bounces in here, and we'll just have to see how this goes. I don't know exactly how this is all going to play out, but that's just my opinion, just very generically without diving into details. I think, we could see something like this, right, guys? It comes down, it lips up like this, and it goes down, then it tracks sideways, and it goes down. I don't know exactly what's going to happen behavior-wise. But, even though this came down, lipped up, tracked sideways, still on the average it went down, right? This one came down, came up, tracked sideways, came down again, came up, tracked sideways. You follow what I mean? So I may not be able to say exactly how the price is going to track, for every single day, right? But my instincts tell me, based on looking at the data, I think we're in for at least a couple weeks of down. So just when you're thinking about trading, just keep that in the back of your mind, If this thing comes down here into the triple witching, quad witching gate, which is this coming up this Friday, okay, and somehow gets a big bounce, hey, I'll be the first to admit I was wrong, okay? But this is my opinion, and I'm putting it out there. Now, these indicators sometimes will get to the bottom, and that's where you'll get your bounce, okay? You'll get a bounce, but it won't be long-lived, okay? Because the MACD is starting to try to roll over. All right, so that's kind of my longish term opinion about where this is headed. Okay, the S&P 500. Now, for some of the members who've been with me for quite a while, some of this is going to be repetitive, but there's some new members, and that's cool. So I'm going to go over some things that need to be gone over to help people understand. Okay, I trade with a predictive approach to trading. Okay, most people are reacting to the market. And most indicators are reactive. They're reacting to the market, and people are trading by reaction. And that's fine. We still need that. Okay, hold on one second. I got to turn off the air conditioner because it's going to blow and make noise. Yeah, you can't do recording when the air conditioner's blowing because it sounds like there's a hurricane behind you, So most indicators are reactive. Like, for instance, the MACD, especially with these settings over here, is very reactive. It's slow reacting, right? You see how things rolled over here? Let me clear the screen here. So y'all understand what I'm saying, especially with the new members. You see how this rolled over up here? Let's say right there is where it rolled over. You see how the MACD hasn't rolled over? It reacts like 3 or 4 days later and finally rolls over, like right in here. So the MACD is very reactive, right? It's because of the way the settings are. okay, generally it's viewed as a reactive type of indicator. It's going to react slowly afterwards. It's not predictive in nature. Okay? And that's okay. We need that. We need indicators that react, okay? Because they're going to help us have a longer-ish term view, even for a daily chart, which is what we're looking at now, okay? When I say long term, that might just be a few days, okay? Because remember, we're on a daily chart, right? As opposed to 1 day, or even as opposed to prediction, right? This is reactive. Let's talk about proactive. So the MACD is reactive, okay? And that's true for most indicators. Now, let's look at the Big Daddy. Now, yes, this is my own indicator, but it's proactive, okay? And it is predictive in nature. That's why it's called forecast. Okay, and it's trying to predict what's going to happen. So let's take a look at this right here. Let's just look at these. I'll just put little dots here on the top of these 3 peaks. Well, look at the price action. It was completely sideways. See that? Let me see if I can zoom in a little. I don't want to make it too big. Let's just see if I can get this to be. So we got something a little bit bigger on the screen here. Okay. Now hang with me because there's going to be more to this video. We're going to talk about the certainty rate down there at the bottom. Okay. We'll talk about how you're going to get access to this script. Okay. For those that are on the TOS platform. So the Big Daddy, as I was saying, is predictive in nature, right? It's not reacting. Okay. See how way back over here, when the market was still going down on these 2 days, the Big Daddy was already saying we're going to go up. Let's just draw. It's like right there. Okay, it's already saying we're going to go up. The next day was down. Look at the bottom of this candlestick. It's way over here. So the market as a whole was still going down. Just finishing its downtrend. The Big Daddy's already saying we're going to go up. The MACD hasn't even crossed over yet. It crosses over way over here. So you can tell the Big Daddy is predictive in nature, right? It's telling us that the market's likely to go up. Okay, the SMI kind of does it too, but look, the SMI is a little bit late, right? It's like a day later. So it's not really predictive as much as the Big Daddy is. The Big Daddy is much more predictive. Okay, so and I'm going to talk about these divergence dots in a moment. But what I want new members to understand is that I trade with a predictive perspective on the market. Okay, yeah, there may be some reactionary stuff going on, okay, but it's more predictive, right? I'm looking at the market in a predictive manner. So I'm looking at indicators and other things and even the certainty rate, and I'm looking at it and it's telling me something that's going to happen that hasn't happened yet. I'm like, okay, something's coming up. Something's going to happen. Right, so I want you to get that. I want the new members to get that. You got to start thinking predictive. Okay, and when you're looking at my videos, try to understand what you're looking at is some of these indicators are predictive. So let's point out. I'm going to point out all the predictive indications or indicators on this chart you're looking at. Okay, let's go through it. One is the cycles themselves. If you don't know cycle analysis, I suggest you study it. Is it predictive in nature? Well, of course it is. Look over here. Have we gotten to this date yet? No, June 22nd. Today is June 10th. What is today? June 10th, June 11th, June 12th? What is it? It is June 12th. So clearly June 22nd hasn't arrived yet. Without diving into the depth of cycle analysis, just understand this, that there's no candlesticks over here yet in this area. They haven't happened yet. Yet this predictive indicator, okay, which we call a cycle bracket, is telling us that the price is likely to come down as we get closer and closer to this time. And again over here. So cycle analysis is predictive in nature. Okay, that's number one. Number two, as I already mentioned, the Big Daddy's predictive. Look at here, the stock market was tracking sideways. And during that whole time, what was the Big Daddy doing? It's telling us something's going to happen. And what is that something? Connect the dots. Down. In this case, even the SMI, for those that don't have the Big Daddy and you're just getting it from my videos, I mean, even though the SMI is slower, you know, from about the same part from there to there, you can tell it's going down, right? You see how the market's tracking sideways, but the SMI, Stochastic Momentum Index, is kind of giving you a hint that things could go down. All right. The MACD's very slow. It hasn't even rolled over yet. And look at these two candlesticks. Okay. The MACD's like ultimate confirmation. It's like the guy that's late to the party. That's okay. We need it. We need that kind of confirmation. We use predictive analysis, and then we use other indicators to confirm. This is predicting. This is helping to predict. These white dots right here are also predictive. They're called divergence warnings. Okay? These white dots you're seeing right here. Sometimes they're red, like over here in yellow. That means it's really getting serious. Okay? But this white dot right here on the Big Daddy, that one, it happened on this big green day right here. And whenever we see these white dots, it's a really good indication that we may, but not always, we may see price decline. Well, sure enough, it happened. It literally happened 1, 2, 3, 4, 5 days later. We finally got a candlestick that broke through this congestion, right, and this consolidation. It broke below it. So think about that for a second. I want you new members to, even if you have to pause the video, I want you to hear what I just said. That little dot right there predicted a divergence. It detected a divergence, okay? Meaning this indicator is going down, but pricing was still going sideways. Sometimes pricing will be going up, and this thing is predicting that we're going to get, it's predicting, or it's picking up on a divergence, which almost always translates into price going down, okay? So think about that. This dot came up 5 days before we actually had a candlestick that told us, yeah, the market's going to go down. That's predictive. Okay, so for new members, I want you to get that the primary thing I want you to understand about that big whopping $5.99 that you're paying for, what you're paying for is the predictive nature to the service that should help you be a better trader, right? You know something's coming. Okay, so I didn't use just the certainty rate by itself to make this trade on this day on 6/9, and I earned $1,500. I used everything else. I used everything together, I should say. I used the fact that we're moving into a cycle low, so this predictive cycle analysis tells me that. I saw that this was moving down. This is moving down. We've got divergence dots here and here. Okay? And at that time, I didn't have a script written for the certainty rate, but I could see the data. And I knew the data well enough to know that it was telling me something. So what was the certainty rate telling me? Let me hover over the day. The last predictive piece to all this is the certainty rate at the very bottom in this video, the little yellow specks you're seeing. I got my candlestick, hover over the day I placed the trades, June 9th. And what do you see at the very, very bottom down there? A yellow speck. That's just a visual representation that something came up in the data that said, hey, I'm predicting the market's going to do something, up or down. Right? This certainty rate doesn't tell us direction. It just tells us something's going to change, and the price direction is going to change. It's up to the trader to decide which way that trade is going to happen. Well, that was obvious, right? It was obvious. The other indicators tell us that, right? They're all telling us down, down, down. MACD's starting to lose a little bit of space in between its lines. Even it's not predictive in nature, but you can still kind of geometrically get a feel for it, right? All right, so I wanted all the new members, and even some of the old ones that maybe haven't had a chance to really hear all this, that this content that I put out, this service, this stupid cheap service, is all about predicting what the market's going to do. Yeah, I just showed you right here that yes, it's possible to predict what the market's going to do. And the certainty rate, which has just been added here at the bottom, okay, is a new addition to the whole predictive aspect of the service, okay? And yeah, it worked. Okay, look at the gap between this way back here, which was May 5th, all the way to May 25th, all the way to June 9th. There was nothing. Nothing came up in the certainty rate between those two. Right? Everybody follow me on that? Think about that for a second. I want everybody to focus down here at the bottom. This was June 25th right here. And May 25th, sorry. And this was June 9th. I'll even put it right here, 5/25. Okay. And this is 6/9. I know for some of my international friends, we might do dates kind of funny, but that's May 25th and that's June 9th, okay? And on this particular certainty rate, you can see there's nothing in between. There's no yellow dashes between there. So there was no data that came in, which data comes in every day, but it wasn't significant enough to show up on this indicator. You follow me? And I might just change this to say the certainty indicator instead of rate, but whatever, it doesn't really matter. But guess what was happening between there and there? There were other indicators, predictive indicators, that were helping me to make a decision, right? I've got divergence dots coming up. I've got this going down. This is starting to go down. I got this going down into this date, to be specific. Don't follow the arc of the circle so much. It doesn't really mean anything. It's just, we're more concerned about where the two arcs come together, okay? The price usually declines down into there, but not always. Okay? So as I was looking at all this other predictive stuff going on, and I'm getting a feel for, okay, there might be a trade coming up, lo and behold, on June 9th comes what I call, a very solid confirmation. Because this data, as I've mentioned before, has nothing to do with the stock market or anything financial. Nothing. It's completely unrelated. Okay, it's crazy how much of a confirmation this thing has become. Okay, when I saw that data on June 9th, I'll forget about it. I'm making a trade. And the rest was history, as they say. $1,500 less than 24 hours later, okay? All right, so I want everybody to get that. We're looking at this synergistically. We're looking at this holistically. We're using all these together, okay? So for the new members that are like kind of scratch your head and this is a lot to digest, just go back, pause the video. Make some notes if you have to, okay? Learn about cycle analysis. It's going to really help you, okay? If you're on the TLS platform, I'm about to show you how we're going to get you this script for the TLS platform, okay? All right, so let me switch over to the desktop app. We're going to show you a couple buttons I added on there, and then we'll talk about how I'm going to get the script to everybody. Okay, so here is the certainty rate desktop app. And just real quick, I had a couple members say, "Can I get the app?" I love my members. I love you guys. I love you guys and gals. I do. But no, you can't get the app. Okay. I don't know if you realize how much time and energy it takes to write apps. It's not a freebie. We're not giving stuff away. This isn't. I'm not a government agency. I don't give stuff away at the expense of taxpayers. Okay. No, you can't have the app. Okay, you're paying for the service. That's how it works. All right. So anyway, you'll see on here that I added in create a TOS script button. Woohoo! So TOS, for those that don't know, this is Thinkorswim platform, which is that trading platform in the background. Right now, you're just seeing the chart, but there's ways to trade. You click these panels over here, and you get a trading side panel pops out, and you can place your orders, okay? So that's what that stands for. TOS is Thinkorswim. That's what this thing is back here. That's done by TD Ameritrade, okay? So if you're in the United States, you can download this onto your desktop, okay, and you can trade using it. If you're international, then there's at least one other member that's working on a script that may I'm not going to speak for him, but he's working on a script that may be useful to some other traders. I think he uses what's called TradingView, if I remember right. Okay, so get on the Discord server if you aren't already, and you can chat with him and Okay, and when the time comes, and we'll see about getting that script for you. Okay, but I'm not writing that script, so I don't want to speak on his behalf. Okay. All right. So to get the script to the members, what you're going to get is you're going to get, for those that are on the email list, and there's a thread on the Discord server, email only, thread, channel. Just drop your email in there, and then I'll pick it up and I'll add it to my email list in my database. Okay. And you'll see down here it says notify members, right? See this right here, notify members? So what this create TOS script is going to do, it's going to grab all this data out of this top grid up here. Okay, it's going to grab all this data, or at least these first two columns. Okay, and it's going to create a script that this platform can read and interpret. Okay, so this data on this spreadsheet right here, this grid, plus the script, they're going to get dropped into Dropbox. There's a Dropbox location. Okay, and that's called a URL, or a website location. When I click notify members, you're all going to get this little verbiage down here. Okay, and you're going to get both this a spreadsheet with this data in it, and you're going to get a link to the spreadsheet that points to Dropbox. You click on the link, it'll download it to your desktop or your laptop. Okay. You also get another link in there that's going to be the link to the TOS script. Okay, and you click on that one, it'll download the script onto your desktop or your laptop. I don't know what it's going to do for mobile devices, guys and gals. Okay, I can't speak to that. This isn't designed for mobile devices, so get yourself a cheap laptop. Okay. All right, so let's talk about it. How are we going to use this script? So now I'm going to switch over and show you, for those that are using the TOS platform, how you're going to import the script. Okay. Remember, you're going to get a link in the email. You're going to click on it. It's going to download the script to your machine. And then from that point right there, I'm going to show you how to import it into TOS, okay? So here I am on the TOS platform. Now let's say I want to import Giddis's certainty rate. I want what Giddis has, man. I want what Giddis has. Giddis has this stuff down here. I want that because he says it's predictive in nature, right? So I want it. So let's go get it. How are you going to get it? First of all, there's a couple ways to do it, but I'm going to show you the easiest way. Upper right-hand corner says Studies. Click on that. You're going to click Edit Studies. You get this dialog box. You see a bunch of studies over here. Over here is the studies I'm using already on my chart. Okay. Cycle low is not showing right now because it's something I was working on. So I just have it turned off, right? It's not visible, so forget that. As a matter of fact, just get rid of it. So let's look at this real quick so everybody understands what's being used. Simple average, that's this light blue line. The MACD, which we already looked at, that's this indicator over here. Okay. Right? MACD, here. Big Daddy, here. SMI, here. Certainty rate, here. Everybody follow me? So all these indicators or studies, whatever you want to call them, are showing up below the candlestick chart. Okay? That's how TOS platform works. Okay? So now, how do we import the certainty rate? So I'm going to go ahead and get rid of this. I'm going to just get rid of it. Okay, I'm going to hit X. I'm going to hit apply. You're going to notice it disappears on the chart down there, right? Oh my gosh, the certainty rate disappeared. What are we going to do? How are we going to get it back? All right. Let's go import it. So you see this import button right here? That's what you're going to do. Now don't worry if I'm moving too fast, because the great thing about YouTube videos or any videos, you can pause and go back. Okay. So now I'm going to click import. Okay, hold on one second. Let me do something. Let me just start like 100% from scratch so y'all can see how this works. We're going to click import right here. Okay. So we click import. Get rid of the stuff. Remember I said you're going to get an email, and in that link you're going to get a link to the certainty rate script. Well, when you download that script, you click on the link, it's going to download to your computer. You're going to store it somewhere. I stored mine in my documents here. See it? I got a bunch of stuff in here. I play golf and whatever, finances, mathematics, plastic to oil, solar, you name it. Okay, buddy of mine, Travis. All right, anyway, wherever you downloaded that certainty rate, in this case, I downloaded it here. Okay. So all I'm going to do is I'm just going to click on it. You could double click on it, or you click on it once and hit open. Okay. Now you're going to think, well, it didn't do anything. It did do it. It's in this list now. But since this is alphabetical, you notice how this list is alphabetical? And since certainty is C, it's further down. Now you could scroll down if you want to, but the easier way to do this is just come up here in this little search box. Just type CER, and you'll see it. There it is right there. Okay. Now you could double click it, it'll put it there, or you could just hit Add Select. I'm just going to highlight it one time like that. I'm going to hit Add Select, and it put it at the bottom. Okay, sometimes it might put it up way up here in price. It might like throw it right up in there with the price. You don't want it up there. What you can do is just left click and hold your mouse down, click on it and hold it and drag it. Just drag it to the bottom. Okay, it'll put it at the bottom. Okay? And then you just click apply. And bingo, you got a certainty rate at the bottom. Woohoo! Now if you want to see what's in there, because this script can be edited for those that for some reason might want to edit. Let's take a look. Oh my gosh, Giddus is about to show us the gold. There's no gold in here, guys. It's just a bunch of data. Okay, it's just, this is called ThinkScript. TOS platform uses a script, and that type of script that you're looking at here is known as ThinkScript. So we just threw together some script. Okay, and this scripting you're looking at right there, okay, is just what's at the bottom here. It's visually being displayed down here. Okay. So how does that script get created? Well, I showed you on my desktop application, right? I'm a C# developer, among other types of development, and I wrote some C# last night to generate the script, which we just looked at. Okay? So that's how it works. No, you can't have the program in my desktop application, and no, you can't have the code. Don't ask. All right. So there you go. That's how you're going to do it. That's how you're going to import the certainty rate into your TOS platform. Okay? And I already talked earlier how I used the 6-9 indication here to help me place a trade. Okay? Because it helped predict that the market was going to have a price change direction. And listen, think of it this way. Now, this may not always be the case, but in this case, on June 9th, which this data came in at the end of the day, like kind of June 9th at night, this candlestick already happened. So it was pretty obvious the market had gone from sideways to down, right? So that candlestick alone made it easy to make the decision. Plus, as I mentioned earlier, all the other predictive stuff going on, okay? All the other predictive stuff going on. All right? Okay, so that is the full mustard. Now, I know some of you want to know the hourly chart. I think I got some. So we're going to switch over to the hourly chart and finish up this video. I haven't looked at this hourly chart in a while, so bear with me for a second. Okay, some of you, especially for the new members, might say, well, how do you get these cycles in here? You got to draw them. And that's why you need to, that's why I recommend, and in my opinion only, you should go learn cycle analysis, and you'll learn how to draw these cycles. I've been doing this for years, drawing cycles. So I can see cycles with my eye. Okay, I can just pick them out. I've been doing this a long time. All right, we're going to do the cycles right here. I'm going to draw the cycles. Okay, you can always pause the video and see what I'm doing. You can slow it down even. I went to drawings, I go to drawing tools, I come over, I come all the way down. There's this weird looking thing right here called a cycle bracket, and I click on it, and you'll see it right up here under drawing. See, it shows the same symbol. So now my mouse, that little pencil, is ready for me to draw cycle brackets. So I'm just going to look at this. You know, I just noticed that the certainty rate is on the hourly chart here. How freaking cool is that? Look at that, man. On the hourly chart, look at this. That is friggin' scary. Look at that. It predicted on the hourly chart this. Look at it. You can't tell me this is not predicting at the start of this right here. This is all day Thursday, actually, but you can't tell me it's not predicting that something's going to change. Well, it certainly did a day ahead of time on Friday, part of Thursday and Friday. Look at this one. I'll just draw it at the end of the day even. What did we say the certainty rate's doing? Predicting some type of price direction change. It doesn't tell you which direction, it just says there's going to be a change. Oh my goodness, did it ever. I hope that puts to rest for any new members or even veteran members who've been on the channel and been members for a while. I hope that puts to rest that yes, if you had any doubts, they should be put to rest. Just put it out of your mind. The market can be predicted, and often. And in this case, on the hourly chart, these things are like, they're almost worthless. Almost worthless. Look at these. Because these are geared for daily. So they're not very helpful. I mean, the MACD kind of is, but they're not very helpful. But man, oh man, that certainty rate absolutely bombs away. Nailed it. That's amazing. That's the first time I'm seeing that too, by the way. I haven't even looked at the hourly chart. All right, let's do these cycles. I'm not going to dive deep into how I do cycles. You're just going to have to watch. Okay? Right now, I'm eyeballing this hourly chart, and I'm beginning to get a feel for where I think cycle lows are. Okay? And I see, for those that don't know, the things I'm looking at are there, kind of both of these together. This one, this area, here, and here. That's the very first thing I'm looking at. Anything that has kind of a V or a low to it. Okay? That's what my eye's saying to me. And then what I'm going to do is I'm going to experiment with the cycle brackets and figure out which ones align the best. So I'll tell you what, I'm just going to pull from this one right here. We're going to click the left click. And then we're just going to click it once real quick and let go. And then I'm going to drag the mouse to the left. I'll look below. You're going to see arcs developing. Okay. Now I'm going to drag it from this spot to this spot. And I'm not going to click again. I'm just going to look at it for a second and see if it lines up with those other little low spikes. And it really doesn't very well. Let me go a little bit smaller. That one's kind of close. Ooh, that is kind of close. I'm going to stop right there and show you this one. This one is not bad. There. Yeah, there. Yes, there. Yeah, there. And there. Okay. So I may keep this one. I may not. Okay. But let me show you something. That's my phone. That's my pastor saying I did an awesome job today. A lot of you don't know I'm a singer. I sing for the church. I'm a lead singer for the church. That's right. You heard it here first. I do sing. I also had to do some sound engineering on the soundboard after I got off stage because there was a world-renowned Dove Award winner, Dove Awards for Christian singers. He won some Dove Awards. He was at our church today. We're a really small church. And he came from another part of Texas, because Texas is so huge, just like on the whole other side of Texas. He came and drove over with his family and sang for us today. It was really awesome. So anyway, that's what that message was on the phone. So let's look at this together. What do we got going on here? Do these cycles make sense? Well, it does here. Nice low, right? Right down into that low. Here, there's a little bit of a low here, so I'm okay with that. There's one right here. Pretty good, right? This one, boom. That flat spot, good enough for me. This one, but this one's good. A little bit late. It's okay. We don't mind it being a little off. This one. Boom, right on the button. This one, not so much. So that one, it's like over here and it's just kind of sideways. So that one, we saw a price stall, but not a price decline. Okay? So far we're pretty good on 1, 2, 3, 4, 5, 6. Not going to count that one. This one's not so good. It's there, but it's not so strong. I'll tell you what, I won't even count it. Okay, but this one looks pretty good, right? It's pretty close. So guess what? Let's see, how reliable is cycle analysis? Just on these cycles I pulled, because I may pull them again and do a different one. But let's look at them. 1, 2, 3, 4, 5, 6. No, 7. 7 out of 9. Anybody know what that is? How many times does 9 go into 70, guys? Anybody know? About 8 times. Not quite. Because right, 9 times 8 is 72, which would be 72%, or like that. And we're looking for 70%, right? Because this would be the same thing as 0.70. So let's just say, yeah, 9 times 8, almost 80. 80%. Just shy of 80%. Now I ask you, if we didn't do anything else, if I didn't spend any more time pulling on these and didn't try to make it better, which I will in a moment to see if there's one even better than this, would you take 80%, 8 out of 10 times? Oh, please. Imagine you trading just on this alone, 8 out of 10 trades. Just think about it. This is an hourly chart. What if you just trusted this thing completely and just traded it? Crazy. You could trade the upswings if you have a bias towards long. You could do that. But in a bear market, remember, long term or bear, I wouldn't trade up. I'd only trade these. Follow me? I'd only trade the down ones. This way you're trading with the longer term trends, and you're not going to get caught out. Don't trade bullish in a bear market. Okay? Slap yourself. Okay? Snap out of it. All right, so that's 80%. Not bad. Can we make it better? Let's see if we can make it better. This is the meat and potatoes you're getting here. This is how it's really done. Okay? This is how people do real analysis, predictive analysis. Okay? Let's check it again. Can we make it better? I'm going to pull from a different one. Let's pull from this one. It's not better than the one we already had, I can tell you that. So that's not so good. And I already tell that one's not as good. Not as good. So I'm not even going to waste my time. We're gonna pull from over here. I'm gonna just pull from different spots, guys. That's all I'm doing, to see which ones line up the best. Okay, that's okay. I don't mind that candlestick right there being the low instead of that one. It doesn't have to be perfect. It just has to be really close. This one's not so good either. It's only hitting 1, 2, 3, and the rest is garbage. Let's try from this one. Let me make it smaller and see what we get. It's floating. This is what I call a little bit of a float. It's floating a little bit. But it's pretty close. But it's not quite good enough. No. Okay? I'm going to do a few more. Just stay with me. Stay with me on this. This is how it's done. This is all the homework I do behind the scenes. You all seen it in real time right here. Get us doing this thing to bring everybody great service. This one, Okay. I would say the first one I pulled, I'll pull one more maybe. That first one I pulled looked pretty good actually. I just can't remember which one it was. I think it was this one, yeah. Yeah, this one's pretty good. This one's pretty good, guys. This is good here. So I'm going to tell you why one more time. Look at that. That's good right there. That is not a low, but it's tracked sideways. Okay. This is just a little off, but it's close enough. We'll take it. That one's pretty good. It's pretty close. We'll take it. Okay. Not that one. But though it's in the middle, we'll talk about that in another video. Some of my members know about middle cycles. This one's pretty good right here. Okay. That one, but it just tracked sideways. And look at this. Let's check that out. 1, 2, 3, 4, 5, 6, 7. Maybe out of 8. Okay, we'll leave it right there. That's pretty good. Okay. Normally I do this before I do my videos and don't bore everybody, right? But now, for those that don't know cycle analysis, now you know how I did it. And you can apply this same approach I just did to daily and weekly and monthly charts, okay? All right, so there's some people who want to know, come on, get on with it. What are the hourly cycles? All right, I got to increase the time frames. Some of my members are so impatient. All right, let's check this out. Okay, for those who want to know the cycles on the hourly chart, here it comes. You ready? You can write this down. The next hourly low is June 14th at 5 a.m. Okay, some of this is repetitive. Some of this is probably the same cycles I've been doing before. This one is June 15th, 9 p.m. June 15th. It's supposed to be at 5. 9 p.m. That's an ugly looking 5, isn't it? Look at that thing. Whew, ferocious. or atrocious, sorry. The next one after that, June 17th, 1 p.m. June 17th, 1 p.m. June 21st, 4 o'clock in the morning. June 21, 4 a.m. Right there. Which, by the way, this one would be basically the end of quad witching. Okay? So I suspect these two right here, these three even, they may be really good. Keep an eye on these three guys. Guys and gals, for your hourly chart. Them right there, I have a feeling about. Okay. June 22nd, 8 p.m. Okay. 8 p.m. Now, as we come out of quad witching, these cycles may not be so obvious. They may not be low, is what I'm saying. They may not show up as a low. You got to be careful about that. June 24th, about noon. High noon at the OK Corral. Yeah. And then the last one I'm going to do is, that can't be right. June 22nd. Oh, I know why. It's a weekend. Never mind. I'm all right. June 28th, 3 a.m. June 28th, 3 a.m. in the morning. That's it. You got it. Pause video, rewind, write them down. Okay? And that concludes this video and my take on a whole lot of stuff. Hope you all enjoyed the video. God bless all of you. Forgive one another. Love one another. Talk to you all real soon again next time.